Welcome to The Explainer. Today we're taking a truly fascinating journey through the world of digital commerce. We're going to look at the evolution and, frankly, the absolute revolution happening right now with Shopify. We'll start by zooming way out to look at Shopify's massive macro scale across the globe. And then we're going to zoom all the way down to the code-level future of what's being called agentic commerce. So if you want to know where the future of buying and selling is headed in 2026, you are absolutely in the right place. Okay, let's dive into this. $378 billion. That is Shopify's projected gross merchandise value, or GMV, for 2025. Now, this isn't just their corporate revenue. This is the total economic activity flowing through merchants on their platform. To put that into perspective, it's actually more than triple what they processed back in 2020. This instantly establishes the massive global stakes we're talking about today. Shopify just isn't a software tool anymore. It's a foundational pillar of the global macroeconomy, literally powering over 14% of all U.S. e-commerce.
So here's our roadmap for today. Number 1, Shopify's 2026 massive scale. Number 2, the real merchant metrics. Number 3, the enterprise total cost of ownership equation. And number 4, the AI commerce revolution. Let's get into it.
Section 1. Shopify's 2026 massive scale, the macro footprint.
To truly understand where e-commerce is going, we first have to grasp the sheer, unbelievable size of this platform. In the first quarter of 2026 alone, Shopify brought in $3.17 billion in revenue. And this brilliantly illustrates a wild streak that marks 11 consecutive quarters of 25% plus revenue growth. Now, what's really fascinating here is the mix. Their merchant solutions, so things like payments, capital, and shipping, well, they make up the vast majority of their total revenue and are actually growing nearly twice as fast as their standard monthly subscription solutions. Basically, Shopify makes more money when its merchants make more money.
But you might be wondering how many stores are actually running on Shopify to generate that kind of revenue. Well, depending on who you ask, you're going to get wildly different numbers. Store Leads counts about 2.86 million active live storefronts, but Built With, they detect Shopify code on 6.9 million domains. So who's right? Actually, they both are. They just measure completely different things. Store Leads is looking at active businesses making actual sales, while Built With counts every single parked domain, test site, and development store out there. It's a really crucial distinction when we try to measure their true market share.
Section 2. The real merchant metrics, operations on the ground.
Massive platform GMV looks amazing on an earnings report, but it definitely does not automatically equal individual profitability for the operator. Despite the absolute boom we're seeing in digital commerce, only about 5 to 10% of Shopify stores become sustainable, profitable businesses. Research consistently shows that 90 to 95% of e-commerce startups fail within the first 120 days. Launching a store is incredibly easy today, but surviving is incredibly hard. Merchants are facing severe margin compression right now. Rising paid traffic costs, which affect 97% of surveyed merchants, by the way, along with the stacking costs of monthly app fees, eat directly into those gross profits.
Because of these rising acquisition costs, operators absolutely need a reliable way to track their profitability. And that brings us to this critical metric, the Marketing Efficiency Ratio, or MER. It's actually pretty simple. It is your total store revenue divided by your total ad spend across all channels. Essentially, your blended return on ad spend. Now, individual ad platforms like Meta or Google might claim they're giving you a 5x return on your money, but let's be real, they often double count conversions. MER doesn't lie. For brands doing $1 million to $20 million in sales, MER is the ultimate truth teller that really separates the winners from the losers.
Section 3, the enterprise TCO equation, plus versus legacy.
Now, what's really interesting about this is how things change as successful brands scale up to the enterprise tier, known as Shopify Plus. The conversation totally shifts to evaluating the total cost of ownership. Let's look at a brand generating $50 million in GMV. On Shopify Plus, the variable fee is roughly 0.28%, bringing the annual platform cost to about $140,000. Compare that to a legacy enterprise competitor like Salesforce Commerce Cloud, for example, where revenue share fees range from 0.5 to 1.2%, costing the business anywhere from $250,000 to a whopping $600,000. Shopify effectively converts unpredictable infrastructure, server maintenance, and hosting costs into a highly predictable, flat software fee.
But it's not without its technical constraints. If you are an enterprise chief technology officer, 40 API requests per second is your hard, non-negotiable operational ceiling for GraphQL admin requests. This is essentially a speed limit for how fast your outside systems can talk to Shopify. Because it's a fully managed software-as-a-service platform, Shopify strictly enforces these limits to maintain global stability for everybody. So if you're running high-frequency inventory syncs from a massive external database, like an ERP, you can't just plug it in directly. You absolutely must build middleware to queue and throttle those requests, otherwise you'll crash right into this limit.
And because of strict technical nuances like that API limit, migrating an enterprise business to Shopify Plus requires a rock-solid action plan. A typical enterprise migration usually follows a 16-week, 4-phase structure. First, you spend weeks securely mapping those critical data payloads. Second, you build out custom logic using Shopify functions, which, by the way, run lightning-fast, secure custom code modules directly in your checkout. Third, you configure localized routing for your international markets. And finally, you execute the data and DNS switch. It's a complex technical transition, sure, but as this framework shows, it is highly structured and totally manageable.
Section 4. The AI Commerce Revolution. Agentic Shopping.
Okay, we've reached the climax of our explainer. We are currently witnessing a monumental shift away from traditional e-commerce towards agentic commerce. And if you think this is years away, just listen to this quote from Shopify President Harley Finkelstein from the Q4 2025 earnings call. Orders from AI search platforms to Shopify stores grew 15x since January 2025. 15x? That is explosive growth. We're talking about traffic originating from ChatGPT, Google Gemini, and Microsoft Copilot resulting directly in real sales. This isn't some science fiction prediction. This is a commercial reality happening right now on the platform.
Let's see how this builds into an absolutely incredible concept known as journey compression. Think about a traditional search. A shopper might perform 3 to 5 different web searches, land on a homepage, browse through a few collections, and take multiple sessions over days to finally buy something. But with an AI-mediated journey, the entire discovery and consideration phase completely collapses into a single conversation with an AI chatbot. The AI does the heavy lifting, narrows down the options, and delivers a highly qualified buyer directly to your exact product page. And because of this journey compression, Shopify's data shows these AI-referred shoppers are converting at a nearly 50% higher rate than standard organic search traffic. That's huge.
So, how do you actually take advantage of this right now to build a compounding advantage before it hits total mainstream saturation? Well, you need to take these 5 actionable steps. First, measure your AI traffic independently in your analytics. Second, optimize your product pages with rich structural data, a practice known as generative engine optimization, or GEO. Third, build off-site brand authority so the AI models know you are a trusted source across the web. Fourth, go ahead and enable Shopify's agentic storefronts integrations. And fifth, do not neglect your traditional organic SEO because AIs still heavily use traditional web search indexes to form their initial recommendations.
As we wrap up this explainer, I want to leave you with a massive, mind-bending question for the future. The infrastructure is being built right now where AI agents won't just inform a purchase decision, they will actually execute the transaction directly inside the chat interface without a single click-through to your site. So the crucial point is, what happens to your brand when an AI agent, not a human, is the one clicking buy? Are your data and authority structured well enough for a machine to choose you over your biggest competitor? It's a fascinating paradigm shift, and honestly, the time to prepare for it is today. Thank you so much for joining me on this explainer. I really hope this sparked some curiosity, and I will catch you next time.